Assalamualaikum and hi everyone. This is the third part or the third video of preparation for the consolidated statement of financial position for question September 2011, the edited version of FAR300, and this is dealing with preparation for consolidated statement of financial position for a simple group structure. And there is just one parent and a subsidiary. Okay, so we are now in step number 3, and in the 2 earlier videos you can check that videos where I have already shown the preparation of the template as well as workings and all the consolidation journal entries. So in this video we're going to prepare the workings for our computation of reserve and NCI, and to complete the consolidated statement of financial position. Okay, so this is what you have done earlier. We have already done this part, which is all the journal entries. You don't have to be this detailed because I'm teaching you step by step, so you have all the details here. If you are doing this for a final exam, I'll give you a separate tips on how to make things faster. But this is a comprehensive step by step example, so it takes longer time to complete because I'm explaining as well as doing the calculation. Okay. So now you have all done all this. You don't have to do as detailed as this. You just need to do the journal entry as simple as possible, and knowing the effect of that consolidation journal entry into the workings that you have here. Either the working is your schedule, which is to get the analysis of the financial statement information, and also the impact in your consolidated statement of financial position. Okay, let's start. And if you can see here, okay, let's start. You have the schedule of the computation for the reserve and NCI. Okay, you can start off having the correct columns being included here. The first one is for retained profit of the subsidiary. I put here rows. This is the group retained profit, which is the one related to Lily, the parent company. And this column, which is the third column, is for the general reserve of the subsidiary. The fourth column is for the group general reserve, and I prefer to put the non-controlling interest to be the last column. It's up to you if you want to put the non-controlling interest here to be the second one. It does not matter. As long as you have the information there, it would be fine. So the first thing is for you to put the non-controlling interest that you have had for your acquisition of ordinary shares on the date of acquisition, which is the one here. The one you have calculated here, 354,272. It has to be also reflected here, so that is the figure. The next one is I'm going to settle things accordingly. I'm going to do things which are for retained profits of rules. So I will first put the balance as per the given statement of financial position. This 125, it comes from here, which is 125,000, the one as at the reporting date. Yeah, this is the balance given in the question from the current financial year end. So you will include that here. And the one of the parent, you will include that in the parents column, right? So you have the parent column here, 410. So I'm putting it somewhere here, so to separate the one of the subsidiary and the one of the parent company. So retained profit rows is subsidiary, retained profits Lily is the parent, right? Or you can just put Rose and Lily here because understood this is the parent, right? So I just delete that. I put the name there. So the first one is for the subsidiary and this is for the parent. So just put that figure, which is from here. Here, where you have your retained profit figure 410. The same thing should be done for your general reserve. You can see the general reserve here, 50 and 130. 50 for the subsidiary, 130 will be the starting point for the parent company. So you will be doing it here. So for the for Rose, 50,000, and for Lily, this is Lily. So I will just make it a different color. Lily and Rose, right? Okay, now is for you to do the rest. For the subsidiary company, you need to go and adjust for the bonus issue. And the bonus issue was in information number 6 that earlier affected our fair value of net asset. So this 24,000, because you are using your general reserve from the bonus issue that we earlier discussed, you credit the orange share capital and you debit the general reserve. So this will be reflected here in your general reserve. So you will have to show your deduction for that bonus issue here. And with that, there are no more adjustments for the general reserve, right? So what you will see here is you will just be left by 10,000. There are no other adjustments for the general reserve. So you can settle this share of general reserve to the parent company or the one belonging to the group, and you can also post the general reserve that will be shared by the non-controlling shareholder. So this is based on the 60% percentage. So this 6,000 is based on 60% percentage. So you can also do some working there, and that was actually, I can just do the working here for you, times 60%, because that is the percentage. So 6,000, and here it would be the different, or you just take this amount, which is 10 times by 40%. Okay, oopsie. Times 40%, right? I'm going to put a figure here. Okay. This is the amount that you will have to show. This should be 4,000. I just write there 4,000 then. Okay. Next is for you to look at your group general reserve. So there is now the total has been calculated already. You can just take the one of the parent plus the share of the subsidiary, and now you have the total for the group general reserve. And you can transfer this 136 straight away here to the group general reserve that you have here. So I'm going to put the same color so that easy for you to check. Okay, that is the group general reserve. And again, because the bonus issue just now was out of the post-acquisition reserve, remember we do this journal. We did this journal earlier for the bonus issue. This journal entry, we did 2 journal. And the second journal here, which is the one that we maintain the goodwill to its original amount by freezing the reserve, so 24,000, that has to be reflected in your consolidated statement of financial position. That will be put under the general or the under the reserve section. So here you will have to show the capital reserve that was created due to the bonus issue. So that was 24,000. So done for that. The next one is the adjustment that will affect the retained profit section. I'm going to do it by the information. So information number 1, we have already done the adjustment to the retained profit, right? So this information number 1, sorry, information number 2 done, information number 3 and number 2. So if you look at number 2, you have the adjustment for depreciation, this one. So this adjustment for depreciation must be reflected in retained profit of rows. So let's just do that here. Okay, retained profit of rows. That was adjustment related to retained profit of rows. And that what is the amount that it will show here is the amount that has been under provided. So this is the one that you will show the depreciation of equipment, or you can write down here under provision of depreciation. You don't have to be so long, and you will write the amount, which is the amount that you have calculated here. Okay, that is the amount, the same amount that you have calculated. So I'm just using the same color. Next is information number 3. Information number 3, because we go by information, go and check what affect rows. So this is the one that is affecting rows, where that is related to the dividend payable by rows, redeemable preference dividend, which is a finance cost. So you have to record that here. Okay. And that is redeemable preference dividend by rows. Do not put the one payable by the parent here. So that is going to be deducted. So that is the only thing that you need to adjust in your subsidiary, because the remaining adjustment here is what affecting the parent company. If you have done this earlier, you would see that the adjustment either affect the parent company or it does not affect the schedule of group reserve and NCI at all. So after you have done this, after you have done all the adjustment for the subsidiary, you can total up the post-acquisition balance, or this is actually adjusted balance, adjusted post-acquisition balance, and that one is 122,521. Look at how much is the share of the parent and how much is the share of the subsidiary. So this is the share of the subsidiary and the share of the the share of the parent. I apologize for that. 73,513, where you take 122,521 times 60%, and the share of the non-controlling interest would be 49,098, where this is actually taking 122,521 minus 73,513, or this could also be the case of 122,521 times 40% NCI. You get 49,008. Done for the non-controlling interest share of the retained profit. Now we proceed with the adjustment that would affect parent. Information number 3, when it affects the subsidiary, it will also affect parent. I'm talking about the redeemable preference dividend here. So this redeemable preference dividend that you have here, right, which is this one here, okay, is the one declared by subsidiary. However, the parent company will have a share of that dividend. So that information 3 to the subsidiary is an expense, but to the parent that would be an income. Why an income? I'm going to put it here. This is, we're not doing that. We're doing this one first, the one related to the subsidiary. It is going to be an income because the redeemable preference dividend is shared from the subsidiary. So how much? It's going to be 25%, right? Because the percentage acquired is 25%. So you have 2,500 you have to add. And this, at the same time, the parent itself declare their own dividend. This one, this 20,000, which affect Lily's column, the parent. So that 20,000 must be shown in the schedule, right? And when you do that, you need to go and deduct instead of adding it. Why? Because this is an expense of the parent. The one that is shared from the subsidiary is what you add. The one that was declared by the parent must be deducted. The next item, number 4, does not affect the schedule. Number 5 as well does not affect the schedule. Number 6 we have dealt with because we talked about the bonus issue much earlier. Now we are doing information number 7, where this is intercompany debenture interest that the parent has not yet recorded, but the subsidiary has. So what you need to do now is to record another share of income from the subsidiary, which is the share of debenture interest income. So debenture interest was earlier, debenture interest here is debenture interest receivable. Why receivable from rows? Because when earlier rows declare the debenture interest here, let me just show you this one, right? The one here, 8,000. Parent has its share of debenture interest income. So how much? 25%. So that 25% is 40%. 25% refers to the preference share, right? Acquisition of preference share. But for the debenture, that was 40%. You can check that again. Is here 40%. 40%. 40,000 from 100,000. Next, done with that. Now you can total up the parents column after taking the share of profit. So that would be 460,813, and that must be shown here in your reserve section. And remember, I put the reference here. It is from the schedule, and you have already done the calculation for the retained profit of the group via the schedule. Okay, next one is to calculate the non-controlling interest that is available at the end of the year. As at the reporting date, you just total up this 3, 1, 2, 3, the item that you have in this section, and you have 407,280. The same thing would be here. And this is the non-controlling interest. Okay, done. So you are done with the schedule. Now settle all the intercompany transaction that you need to eliminate here. Remember, for the item here, what you need to adjust is the surplus as well as the depreciation adjustment. The surplus is from information 2, which is already discussed earlier. You debit the plant and equipment, and for the under provision is when you go and credit the plant and equipment 12,479. You must actually eliminate the depreciation that has been under provided. So this will give you the final figure that the group will have to show, which is 200. The same thing should be done here, right? Which is for your inventories. Here is the 6,500 that was being adjusted in information 3 for the goods in transit. This is good in transit. You can also read my little note here, this one. And 8,400, which is information 8. This is to eliminate the unrealized profits. So this will give you 245,100. Taking this, plus this, plus this, minus this. So you can look at the workings that I have already shown you here. Next is the receivable. You also do the adjustment for receivable. There are 2 adjustments for receivable. Number 1 is the adjustment in the information number 4, right? Because information number 4, accounts receivable, was credited by 20,000 here. So this is information 8, as well as also info 4. I write here info 4 as well. Right, so there are two information that you need to take note. Information 8 and information 4. All right, now. And then information 8 is the adjustment that you eliminate the intra-group balance that are still owing, which is this one, the one here. You can see here, I think. Okay, it is 42. And when you do that, you need to go and deduct because credit account receivable. When you credit your account receivable, you must also credit your accounts payable because these are the things which are being cancelled off. Sorry. So what you do is here, I'm going to reveal this for you. 13,500 and 42,000, meaning to say that it's the same thing that you adjust here. 42, you must also adjust in the current liability section. And remember that 13,500 that you have here is also from information number 8, right? Information number 8, as well as this information related to information number 4. So both information 8 and also information 4 is the same thing. Next. Okay. Right. We go to the next item. It does not take that long. Which is the bill receivable adjust for the undiscounted bill. Undiscounted bill is item in information 9. You credit bill receivable, you debit bills payable that were undiscounted, which is 8,000. So that should have been done in the bills payable here. Bills payable. Okay. Next is the adjustment that will relate to the bank. Bank, you can either adjust the cash in transit there, but my choice today is not to adjust the cash in transit in the bank. You can also add this cash in transit that was due to the cancellation of the loan to and from. So you can also add this figure, which is 20,000 to 126 here. So it would be 146 without having cash in transit. Both are right. Now, for the ordinary shares, we are done because I have mentioned this one relates to parent and that the same thing for the cumulative preference shares. They are both equity shares. Now, the last few items, redeemable preference shares, you need to do some adjustment, elimination of the investment that you made in the subsidiary. So that is being deducted, no other things. And you will get the final figure there after the deducting the amount acquired by the parent. So you will get here 60, 100 minus 40, 100 minus 25, you got 75. The last item is the debenture interest payable that you need to do, which is from the item in the Sofp. There are two more actually, and that is to deduct the intercompany debenture interest which belongs to the parent. This shouldn't be reported because this is an intercompany transaction. What is reported is the debenture interest payable by Rose to other debenture holder. The last two items here should report this. The preference dividend payable by Lily to the shareholders, and also preference dividend payable by Rose to the non-controlling interest. So this is what you have. Nothing here. Yeah, you have the one of the subsidiary of the parent 20,000, and that is going to be here 20,000. And the one payable by Rose is 10,000. And what will be deducted is those that relates to the subsidiary. To the subsidiary which belongs to the parent. Here, 10,000. Out of this, 25% belongs to the parent, the share of dividend. So 2,500. What would be the one payable to the non-controlling interest? This is not non-controlling interest. This is payable to other holder, because this is redeemable preference dividend payable. So I put here redeemable preference dividend payable, so it does not relate to non-controlling interest, to other holder. So that would be this figure, right? And you can now calculate the total from the liability and equity section, which is 3568893, and the total from the asset section, which is equal this total. So this is the rest and the thing that you should be able to do, and this is the complete answer of it, right? Maybe you want to have a go to look at the rest of the part of it. Yeah, so these are the things that we are doing here: prepare schedule and prepare the complete, doing the elimination in the group statement of financial position. I thank you for watching, and remember this preparation has shown you step by step how to prepare the consolidated statement of financial position, right, with the consolidation adjustment, journal entries, as well as doing all the complete working. I thank you for watching, and I hope you can share this video with others if you think that has a lot of benefit to you. And I'll see you when I will see you. Like the video if you would like to have more videos in the future. Thank you so much, and have a pleasant day ahead.